You get a salary raise. Your income finally feels comfortable. And almost immediately, one thought enters your mind. It is time to upgrade my car. The showroom lights are bright, the salesperson smiles, and the numbers sound harmless. Only this much per month. It feels responsible. It feels deserved. But what if I told you that this single decision you've been taught to see as progress could quietly destroy your ability to ever build real wealth? Not loudly, not instantly, but slowly, month after month, year after year. Most people don't stay broke because they earn too little. They stay broke because of the financial choices that look normal, safe, and socially acceptable. And car loans are one of the most dangerous examples of that. This video is not about hating cars, and it's not about shaming anyone for wanting a better lifestyle. Cars are useful, convenient, and sometimes necessary. But what almost nobody explains is how car loans work against you financially, even when you can afford the EMI. Banks, dealerships, and society have trained us to think in monthly payments instead of total cost, emotions instead of math, and status instead of long-term freedom. Today, we're going to break that illusion. I'll show you why a car loan is not just a purchase, but a long-term financial commitment that drains your income, limits your choices, and delays your wealth without you realizing it. By the end of this video, you'll never look at car loans the same way again, and more importantly, you'll start seeing the difference between looking rich and actually becoming wealthy. Most people decide to buy a car based on one simple question: can I afford the monthly payment? If the EMI fits inside their salary, the decision feels safe. But this is where the trap begins. When you focus only on the monthly installment, you stop seeing the real cost of the car. You don't see the full price, the interest, the insurance, the maintenance, or the long-term damage to your cash flow. Banks and dealerships understand this psychology very well. That's why they never talk about total cost upfront. They stretch the loan tenure, lower the EMI, and make an expensive decision feel light and manageable. But afford is not about whether you can pay something monthly. True afford is about whether that payment helps or hurts your financial future. When a big portion of your income is locked into a car loan, your flexibility disappears. You can't invest aggressively. You can't take risks. You can't handle emergencies comfortably. You become dependent on your next salary, not because you're irresponsible, but because your money is already committed. The car feels like progress, but financially, it's a step backward. This illusion keeps millions of people stuck in the same income bracket for decades, even as their salary increases. A car is one of the few things people buy knowing it will lose value every single year. The moment you drive it out of the showroom, its price drops, not slowly, but instantly. Yet you continue paying full price plus interest as if it's gaining value. This is the brutal math most people ignore. You are borrowing money to buy something that is guaranteed to be worth less tomorrow, and not just a little less, sometimes 40 to 50% less within a few years. Compare this with assets like businesses, skills, or investments, which at least have the potential to grow. With a car, depreciation is not a possibility. It's a certainty. Still, society treats upgrading cars as a sign of success. But real wealth is built by putting money into things that multiply, not things that shrink. When you finance a depreciating asset, you're swimming against the current. You're working harder just to stay in the same place. The car may look impressive, but financially, it's doing the opposite of what wealth building requires. Interest is the silent killer hidden inside every car loan. Most people know they're paying interest, but very few calculate how much. Over 5 to 7 years, the extra amount you pay to the bank can be massive. Add insurance premiums, maintenance costs, fuel, repairs, and registration, and the real cost of owning the car becomes far higher than its sticker price. Yet none of this is considered during the emotional buying moment. Banks love car loans because they are low risk and highly profitable. Your salary becomes the collateral. Even if your financial situation changes, the payment doesn't. The car doesn't care if you lose a job, face a medical emergency, or want to start a business. The EMI still leaves your account every month. In reality, your car is not serving you, you are serving the loan. Your future income is already promised to someone else. That's why many people feel financially stressed despite earning well. It's not lack of income, it's lack of control. The most dangerous cost of a car loan is not interest or depreciation. It's opportunity cost, the money you never see because you never invested it. Every EMI you pay could have been building something else: investments, savings, freedom. When invested consistently over years, that same amount has the power to compound. But compounding only works when money is free to grow. A car loan blocks that growth completely. Instead of your money working for you, you work to maintain a lifestyle image. Over time, this creates a painful gap between people who look successful and people who actually are successful. One drives a new car but lives paycheck to paycheck. The other drives an average car but owns assets. Society praises the first and ignores the second, even though the second is winning financially. Opportunity cost is invisible, which is why most people underestimate it. But it is the difference between financial struggle and financial independence. Social pressure makes this trap even stronger. We are constantly exposed to images of success tied to cars, advertisements, social media, neighbors, relatives. Owning a better car becomes a way to signal progress, even if the progress is fake. People upgrade cars before upgrading their net worth. They care more about what others think today than what their future self will need tomorrow. This mindset is expensive. Most people you're trying to impress are not paying your EMIs. They won't help you when financial stress hits. And yet, decisions are made to match appearances, not financial reality. The truth is uncomfortable but necessary. Wealth grows quietly. It doesn't need validation. If a car loan is delaying your peace, your options, and your freedom, then it's not a reward, it's a liability dressed as success. Car loans don't destroy wealth in dramatic ways. They don't announce themselves as mistakes. They feel normal, responsible, even successful. But over time, they quietly take away your options, your flexibility, and your ability to build real financial freedom. The truth is, wealth isn't about what you drive, it is about how much control you have over your money and your future. A car can take you places physically, but only smart financial decisions can move your life forward. If this video made you pause and rethink how you see car loans, then it's already done its job. On Money Uncovered, we talk about the money truths most people avoid, the habits, decisions, and illusions that keep hardworking people stuck. If you want honest conversations about money, psychology, and real-world wealth building, make sure you like this video, subscribe to Money Uncovered, and share it with someone who needs to hear this before signing their next loan. Your future self will thank you.